In 2023, the Oklahoma Supreme Court dismissed the last active reparations lawsuit filed by survivors and descendants of the 1921 Tulsa Race Massacre. The ruling was narrow in its language and vast in its implication. The court determined that the plaintiffs had not demonstrated that they had suffered a specific, particularized harm under Oklahoma's public nuisance statute. In other words, the destruction was too large, too systemic, and too complete to constitute a legal remedy under the available framework. The scale of the crime became its legal defense. If you watched episode 1 of this series, you know what was destroyed in Greenwood on June 1, 1921. 35 square blocks, more than 1,200 homes, every business on Greenwood Avenue, 300-plus enterprises built over 2 decades of deliberate, self-sustaining Black economic development, gone in 16 hours. What you may not know, what nobody taught in any curriculum, is what it was worth. Not symbolically, not rhetorically, mathematically. Today, we run 3 calculations. Each one expands the scope. By the time we're done, you will understand not just what was taken, but what the taking has cost. Compounded. Across a century. In today's dollars. To understand what was destroyed, you have to first understand what existed. By 1921, the Greenwood District contained property with a documented replacement value of between $1.5 and $2 million. That is the on-the-books assessment of the physical structures, the buildings, the inventory, the equipment. That number does not include the intangible assets, the goodwill of businesses that had customer relationships spanning decades, the value of professional networks, the social capital of institutions, churches, newspapers, schools, that cannot be appraised on a balance sheet, but are absolutely converted to economic output over time. The $1.5 to $2 million figure is the conservative floor. We will use it as our starting point for the first calculation, and then we will build from there. Calculation 1, CPI inflation adjustment. The first and most straightforward calculation is Consumer Price Index adjustment. We take the documented property value of what was destroyed in 1921, $1.5 to $2 million, and apply standard inflation methodology to determine what that purchasing power represents in 2026 dollars. $27 to $32 million. That is what the property destroyed in Greenwood would cost to replace today, using nothing more complicated than the federal government's own inflation calculator. That number is significant. It is not the real number. CPI adjustment tells you what something costs today that cost X then. It does not tell you what the destruction of a functioning economic ecosystem, its businesses, its equity, its institutional relationships, actually cost those who lived within it and the generations that followed. For that, we need a different methodology. Calculation 2, Full Economic Loss Commission Estimate. In 2001, the Oklahoma Commission to Study the Tulsa Race Riot of 1921 issued its final report after years of survivor testimony, archival research, and economic analysis. The Commission's economists attempted to calculate not just the physical property loss, but the full economic disruption, business revenue interrupted permanently, professional practices destroyed, labor hours lost, insurance claims denied, and the cascading economic damage to the families who never rebuilt to their pre-massacre standing. $450 to $500 million. That is the full economic loss estimate, not the property replacement cost alone, but the economic ecosystem that was destroyed, the businesses that never reopened, the professional practices that were never rebuilt, the institutions that once served a community of 10,000 and could not be reconstructed in the hostile environment that followed the massacre. And this number still doesn't tell the whole story, because neither of these calculations accounts for time. Neither of them asks what happens when you take $450 million out of a community, not in 2026, but in 1921, and then trace where that capital would have gone had it been allowed to compound for 100 years. That is the third calculation. And this is where the number becomes almost incomprehensible. Calculation 3, 100-year compound wealth model. Compound interest is the most powerful force in finance. It is also the most powerful instrument of measurement when calculating historical theft. The question we are asking is this: if the capital of Greenwood, the business equity, the real estate value, the institutional assets, had been allowed to survive and compound at modest, conservative rates of return, what would it be worth today? Economists use several models. We will use 3 benchmarks, each representing a different class of asset and rate of return. $200 billion. That is the conservative compound wealth modeling figure. Some economists who have studied this question in depth place the number higher, closer to $300 billion when accounting for the full network of economic activity that a functioning Greenwood would have generated across a century of American economic expansion. To put that in context, the entire GDP of Oklahoma in 2024 was approximately $230 billion. The compound wealth that was destroyed in one night in 1921 is comparable to, and by some estimates exceeds, the annual economic output of the entire state of Oklahoma today. This is not a metaphor for injustice. It is the arithmetic of injustice. The wealth gap that every politician describes as a persistent, complex, multi-causal problem has an address. It has a date. It has a calculation. It happened on June 1st, 1921, in a 35-square block district in Tulsa, Oklahoma, and it has been compounding in reverse ever since. The capital that should have passed from the Stratford family to their children, from the Span sisters to their grandchildren, from the investors in Greenwood's banks to the next generation of Black entrepreneurs, that capital did not disappear. It transferred into the hands of the individuals and institutions that took it, and their heirs, who have had a century to compound what they acquired in a night. In 2023, the Oklahoma Supreme Court dismissed the case brought by the last living survivors of the Tulsa Race Massacre and their descendants. The youngest survivor, Leslie Benningfield Randall, was 108 years old when the court issued its ruling. She died the following year. The court's determination was technically precise and morally revealing. Plaintiffs could not establish that they personally had suffered a specific, cognizable harm under Oklahoma's public nuisance statute as it applied to the defendants. The destruction of Black Wall Street was too large, too comprehensive, and too systemic to constitute an actionable injury under the available legal framework. The scale of what was taken became the procedural barrier to any remedy for the taking. The numbers we have just calculated, the $32 million in property, the $450 to $500 million in full economic loss, the $200 billion in compound wealth. These numbers did not persuade an Oklahoma court that anyone had been harmed in a legally cognizable way. That is not an oversight. That is the architecture of the system. The